Welcome back, folks. Hello, hello. Marcel Klinovic, the Butcher of Wall Street. It's good to see you guys. David Charles Wolfie, ladies and gentlemen. It's a great day. So I spent a lot longer than I probably should have putting all this stuff together. Probably about 5 hours yesterday, which is kind of ridiculous because I usually do my live streams based off of 3,000 different tabs and spit out all the information off the top of my head. But I took the time to write this out for you guys so you can come back and look at it later on, or so that I could provide you with the actual presentation itself. I think that would make things easier for a lot of people. But I want to make sure that everyone's actually able to see this, because the last time I was trying to stream, YouTube was having some serious issues. What's going on, Big Ace, Bilbo, Jason, Quant? Good to see you guys. Let's see, we got Kim in here. Welcome back, ladies. Let me know if you guys are able to see this stream on YouTube and Rumble and Twitter as well, just to make sure. I want to confirm that everyone's able to view the stream before proceeding. Everyone can participate with the chat. Makes things a lot more fun. Britt, thank you very much, my friend. There we go. All right. Hey, Daniel, Bacon. You guys are watching on YouTube. Everything's working well. Awesome. Looks like the other streams are working as well. Thank you very much. Check this out. 86% off exchange. If that doesn't scream market manipulation, boy, I don't know what does. A lot of people are probably wondering, we did a poll recently, and some people didn't know what off exchange meant, what dark pools are. So let's explain that very briefly. Because what you're seeing here is 86% of the total volume for the day out of 25.8 million shares traded were traded off the exchanges. What's going on, AW? Matt, Eagle Eye, ladies and gentlemen. Look at these numbers. They're astronomical. Astronomical. Off exchange means any trade that happens outside of the traditional stock exchanges, outside of the New York Stock Exchange, outside of the NASDAQ. A lot of people are wondering, well, if they're trading outside of the New York Stock Exchange, where are my stocks trading? I thought I was buying them and they're listed on the NYSE or the NASDAQ. Well, that's true. That's where they're listed. But there is a plethora of legalized manipulation that has been enabled by the Securities Exchange Commission and FINRA, mainly because of a gentleman by the name of Bernie Madoff. And, well, you know, when there's billions and billions of dollars to be made, some of the world's richest people are more likely to allow some nefarious activity to occur in the guise of market fairness, when in reality, all they're doing is sending your orders into dark pools. Dark pools are a type of off-exchange venue used to manipulate prices, period. And I'll explain exactly what they are here on the next slide, just in about 30 seconds. Then you've got internalized and wholesalers. So some of them are going to dark pools. Some of them are going to internalizers and wholesalers. You're talking Citadel Securities, Virtue Financial, Susquehanna, State Street. Of course, some of these companies have been caught, not some of these, almost every single one of these companies has been caught multitudes of times manipulating markets. For example, Citadel was, banned from doing business in some Asian markets, as well as Susquehanna. No, I'm sorry. Was that State Street, guys? Jane Street. It was Jane Street that just like 2 weeks ago or last week we did a video on, was announced that they can no longer do business in Korea, I believe it is, because they were caught. No, that was India. They can't do business in India anymore because they were caught manipulating the indices. So this is something that happens over and over again with these guys. And most times they just get a slap on the wrist. But actually, outside of the United States, as I stated, Jane Street is no longer actually able to trade in the Indian markets. Of course, they're trying to appeal that, but it's unlikely that that appeal is actually going to work. Alternative trading systems. Some people will be like, oh, an alternative trading system, that's just a dark pool. Kind of, but not really. And then retail order routing platforms. You're talking a lot of your brokerages. A lot of these, they use their retail order routing platforms in a way that you wouldn't think. And I'm going to explain exactly what that means, because first we're going to start with what are the dark pools. All right, folks? Figure this out. I'm using the same one here to show you guys an example. And this is, again, the exchange. You see all the exchange, how much of the volume took place on the New York Stock Exchange? 4.3%, or only 1.3 million shares were traded on the New York Stock Exchange, and 581K on the NASDAQ GSM. But off exchange, in the dark pools and the alternative trading systems and the internalizers, that was 86% of all the volume, 25.8 million shares. And you got people out there like CEO of Virtue Financial, Dougie Sifu, saying that we're doing it in the name of liquidity and blah, blah, blah. And the reality of the fact is, well, folks, if you call creating synthetic shares that don't exist and being allowed to sell shares that don't exist good for the markets, then I think that there's something wrong with you. And the reality is that either you're making a lot of money from it, or your friends are. Because a dark pool is a private system where large investors, right, Chase, Citadel, Jane Street, Virtue Financial, etc., and even some broker-dealers trade without publicly revealing their order size or identity until after the execution. This is purposely designed to reduce the impact that their buys and sells have on the market, and it purposely routed in this way to prevent price fluctuations. It's mainly used by these institutions, and the prices are not reported during the actual trade. They're reported after the fact. That means they can make these trades, and they don't actually hit the ticker until after hours or until later on in the day. And it absolutely suppresses price discovery. The amount of price impact, the amount it changes the price by trading, millions and millions of orders and shares, right here, for example, 25.8 million in off exchange and only 1.3 million on the NYSE. This greatly prevents the stock price from going up. It greatly could prevent the stock price from going down as well, depending on the position that they're taking. But when they have that much order, it doesn't look like they, when they're trying to keep it close to max pain, they're not trying to let the price go up. They're purposely keeping it towards max pain to prevent themselves from losing more money on options. We have a 17 million share candle. So as you guys just noticed a bit ago, there was only 30 million in total volume for the entire day. And this dark, or should I say this brighter little portion of the screen here is the after hours. So this right here is the after hours beginning. And at 4:24 p.m. Eastern time, there was literally a single candle in which 17 million shares were reported. Most likely 17.41 million shares. This is a dark pool trade. Ladies and gentlemen, that right there exceeds more than 2/3 of the entire volume for the day. So there was 30 million shares traded the entire day, and in a single 1-minute candle after the market had closed, all of a sudden a 17.4 million share order came through. These are the explanations. I took the time to write it out. This could be an institutional block trade or repositioning of exchange traded funds, etc., but it's not currently the time of year for that to be happening. This could be short covering or delta hedging response, but the price didn't increase, so it's not delta hedging and it's not short covering. This could be late reporting of off-exchange / dark pool trades, and that usually is supposed to happen within the last 15 minutes, but it could happen beyond that anytime in the after hours. And this is also possibly FINRA requiring some of these off-exchange trades to be reported late, and often they're printed after hours. And that is one of these two that we're really seeing here. The other possibility would be it's an algorithmic generated volume in order to rebalance or move price without triggering market alerts because it's happening in the after hours. Lastly, which is also extremely highly plausible, is that it could be wash trading, spoofing, or synthetic share movement. transferring shares that shouldn't really exist from one firm to the other, especially if it is overseas, meaning outside the United States. These firms have facilities and subsidiaries in all different parts of the world. And those in the Cayman Islands, for example, or those in Spain or Switzerland or wherever, do not have to abide by the same Dodd-Frank regulations as the ones in the United States. So a firm, let's just call them Citadel in the United States, could sell their, or should I say send their order and their shares from Citadel United States to Citadel Cayman Islands, and all of a sudden they just reset the failure to deliver clock, the FTD clock, and are no longer going to have to report those positions as shorts based on certain levels because they're not having to follow the Dodd-Frank regulations. So we're really here probably seeing either synthetic share or wash trading occurring, but it's also possible that we could be seeing some of these off-exchange trades being reported up to 15 minutes late, or the late reporting of the Darkpool trades, which is also highly plausible in this situation. This right here, this tells me, evidently, that even though the price of AMC stock is only $3 and change per share, it is incredibly dangerous to market makers and short sellers that have short positions or have sold a large number of naked shorts and synthetic shares in this company. So this right here is a glaring indication of just how dangerous AMC stock is to those that are manipulating markets in a nefarious manner. Let me adjust this camera just a little bit. Correct, Eagle Eye. It didn't move the needle because it was a Darkpool trade. You can't have a $30 million share trade a day, and then all of a sudden 17 million shares traded in the after hours in a 1-minute candle and expect it not to make a difference. That's just not possible. You know, it doesn't work that way. 17 million shares traded in the after hours would absolutely skyrocket almost any stock in the entire world. 17 million shares in a 1-minute candle would absolutely skyrocket almost any stock in the entire world. The only reason it wouldn't is if it was some sort of a wash trade, spoofing, market manipulation, or a large batch of Darkpool trades being processed, or should I say being reported after they were processed in the after hours. That's why the price continued to barcode even though there was all that volume in a single minute. This would not be possible if people stopped using payment for order flow brokerages like Robinhood, like Webull, like Fidelity, like Schwab, etc. Why is AMC trading 86% off the exchange? Folks, today's off-exchange and Darkpool volume was 25.8 million shares, which is 86% of the total volume. Okay? The lit volume, the amount going to lit markets, was only 4.2 million shares. That's 13.99%. 14% versus 86%, basically, is what you're looking at there. Over the past 30 days, off-exchange and Darkpool volume has been about 58.6%, and the average lit volume has been 41.39. So even that, by the way, is a massive amount. 58.5% going to off-exchange and Darkpools is fucking huge. But 86% in one day, it's not only huge, it is unprecedented. It is the absolute utmost manipulation and price suppression that one could possibly see in the stock market, just short of companies removing the ability to buy or sell. Now, this happens by default, right? You guys get that? When retail, when you or your friends or your family use apps like Robinhood, Schwab, Fidelity, Webull, etc., E-Trade, whatever, their orders usually never hit lit exchanges. like the NYSE or the NASDAQ. Instead, they're going to the wholesalers and the internalizers. They're going to Citadel. They're going to Virtue. And by trading on these payment for order flow brokers, you're literally giving money to Citadel, Virtue, and all these other companies. These firms fill the orders internally. Okay, they're not giving you real shares from the lit market. They might be giving you a share out of their pocket, or they might not even have any. They're giving you shares that don't exist. They're printing them out of thin air, giving you ones and zeros in your account, and they're hoping they're giving them to you back to you later. Then they pocket the spread. That means they're keeping the difference at what they sold it to you, waiting up to 28 days or more, and then going and buying it for a lower price. And then now they're able to finish the delivery, even though it looked like you had it in your account last month. It was never really there. They gave you fake shares, synthetic shares. And now all of a sudden they made 30 cents or 50 cents or $1 on each single share that you bought. This suppresses price increases, as I just showed you, like that 17 million share candle in which the price didn't change at all. And oftentimes when they don't have shares, they're creating synthetic shares. And this is legal, by the way. I'm not saying it's right. I'm saying it's legal. It's called the Bernie Madoff exception. It's a market maker's exemption rule, 203BI. I don't make the rules, right? That's FINRA, that's the Securities Exchange Commission. They're allowing this legalized crime to happen. And they're allowing people like Doug Sifu, who's known as the Liquidity Fairy, and Kenneth Cordell Bedpost Griffin, who's known as the Bedpost for throwing a bedpost at his wife when she told him she wanted a divorce, allegedly. Well, they have a license to sell things that they don't own. And oftentimes, they don't even buy them back to give them to you. They just fail to deliver. This artificially dilutes the stock's price. This artificially reduces the stock price. And then they report it later. This is the definition of off-exchange trading. And it's not necessarily a dark pool, but still hidden from the live order book. Because off-exchange and dark pool are not the exact same thing. They're all hidden, but they're two different things. Either Citadel and Virtue are internalizing the trade off-exchange, or it's happening in the OTC, in the over-the-counter market, or it's occurring in a dark pool, or it's occurring in an alternative trading system. Right? But these are kind of varying different things. And it's absolutely fucking comical. It's hilarious. If you're not upset about this, it's likely that you have no idea this is happening. And that's understandable because the majority of people, up until they understand, have or had no idea that this was going on in financial markets. If it's not making you mad, it's probably because you don't understand just how badly you're getting robbed. Let me explain. Payment for order flow brokers. The brokers sell your order flow to the market makers. In exchange, the broker gets paid payment for order flow. If it's free, you are the product. There's no such thing as commission-free trades. You may not have to pay the commission that you can see, but you're still paying the commission in the form of hidden fees. And those hidden fees are huge in relation to what you're actually would be paying if you just pay the cost up front of a few pennies or a few bucks, for example. In exchange, the broker is getting paid for this payment for order flow from companies like Citadel and Virtue and Jane Street and Susquehanna. And the market maker, the ones I just mentioned, buys and controls your order and the flow. And most often they're filling it off exchange. They're internalizing it in the dark pools. They're hiding the price action. They're front running the trades. They're making money when you're losing money. Payment for order flow keeps orders off of lit markets and masks the true demand. That is why you can have a 17 million 1 minute candle of shares and it doesn't change the price. 17 million, folks. Think about how massive that is. Again, this creates synthetic shares and artificially dilutes companies. Matt says Schwab had technical difficulties the other day. They're part of the crime mafia. Yeah, I wonder why they're having so much technical difficulties. Maybe their dark pools broke. Angel's going to be transferring all his shares over to Lit Exchange, my friend. Looking forward to working with you. Dark pool activity. Sirens, baby. Sirens. The institutions or market makers are also using these dark pools to trade large blocks of retail owned shares in companies like AMC, like GameStop, etc., to avoid the price impact from hurting their short positions. This adds to the off exchange volume and keeps these large moves hidden so that you can't see it. And it prevents large price jumps. Again, that's how this chart right here, this isn't the price, folks. This red circle where all of a sudden you see this chart jump up, that's the off exchange volume. It's already incredibly high, between 55 and 75%. But we just had 86% in one single day off exchange. That proves to me that they do not have the sufficient number of shares to support the number of shares that were traded. They do not have 25.8 million shares to trade or to sell to people and to firms that were buying them. So instead, they're internalizing them. They're holding them back. They're processing in dark pools. They're creating synthetic shares to give to your account, to the buyer's account, whoever that may be, and hoping to later on buy them back at a lower price. Radtux, I can't really say if that would be a good idea or not, my friend. Cody Mick says, I own a ton of fractional shares. Will I be able to transfer these to Lit Exchange? My friend, if you have a ton of fractional shares, eventually they would just become a whole share. Are you talking about a ton of fractional shares in different companies? Like a fraction of a NVIDIA share or a fraction of Amazon share? Is that what you're asking me? But yes, you will be able to transfer shares to Lit Exchange. Fractional shares we will have to talk about later on once I understand better what you're asking. And of course, that would be upon launch. And at Lit Exchange, we are making it very easy to transfer in your assets, to transfer in your shares, your stocks, etc. Yes, in your base says, I'm personally not a fan of DRS. I dislike how tied up it can be when you need to move them quickly. To each their own. Cody Mick, I'll have to answer that question later on, my friend, once I have a chance to properly give you the attention you deserve, my friend. This is a fact, folks. 90+% of all AMC stock is owned by retail investors. This has been proven now in multiple of AMC Theaters' share counts. And nearly all of that is being traded off exchange, as we just proved to you, because the price discovery is broken because of these dark pools, because of this payment for order flow. And the demand is not reflected in the prices you're seeing or in the NBBO, the National Best Bid and Offer quotes that you're seeing. Retail dominance is absolutely neutered by this routing. And the market makers have complete control, basically, over how trades are executed and when. That is, until they lose control. And then what happens? Well, you have a situation where AMC and GameStop run up 1,600%, 1,800%, 2,000%, where their options contracts go up 3,000, 5,000, 7,000%. And all of a sudden, next thing you know, 150, 190 firms on Wall Street are about to go bankrupt and insolvent and collapse the entire financial system. And they end up removing retail investors' ability to trade. Volume spikes, like the one we just saw with the 17 million candle in the after hours, mask manipulation, particularly if they're printed outside regular hours. And this is all because of payment for order flow and because of dark pools. This would not be possible to a fraction of this extent if people did not use payment for order flow brokerages, if people did not use brokerages that route orders to wholesalers, internalizers, and dark pools. This is the whole purpose of the reason why we've created a stock broker, or why we're creating a stock and crypto brokerage, Lit Exchange. This is from bettermarkets.org. This is from Dennis Kelleher and his team at Better Markets staff in the Western New England Law Review. They said that because these trades happen away from lit exchanges, outside of lit markets, they don't affect the real-time quote until after execution. And then, of course, when they do hit the tape, the prices are affected at a tiny fraction of what they would otherwise do if they weren't all processed in an internalizer or in a dark pool. This is suppressing the momentum, delaying breakouts, dampen sentiment, and more. It's literally robbing the hood. They are not Robin Hood. They're robbing the hood. That's from bettermarkets.org. I will share that down with you guys as well below. This is an analysis they did, again, in the Western New England Law Review on payment for order flow, on dark pools, on these brokerages. And in the 1980s, they found that Bernie Madoff, who would later operate a notorious Ponzi scheme, but who was then a market maker. This guy was a market maker, okay? He was like the top dog on Wall Street. Recognized that he could make a tidy profit if he could just convince the brokerages to route their trades, their order flow, to his firm for execution. And he also realized that he could only make this tidy profit if the orders he received were basically uninformed about the direction of the market. So he began paying brokers for their retail orders. And of course, this was a nice prospect for them back in the 90s and the 2000s, who were that the brokers were then paying 3 cents a share to the New York Stock Exchange for trade execution. So the concept of retail payment for order flow was born. The practice was, of course, very lucrative for brokers who, instead of having to pay 3 cents, were now getting paid to sell their orders to Bernie Madoff, the Ponzi king. And also for the high-frequency trading firms that are buying these orders. And they're making money by front-running trades, by internalizing the trades, by collecting the spread between what they are willing to buy a stock for, the bid, and what they're willing to sell the stock for, the offer. So they could then sell you the stock, wait weeks or even months, and kick the can down the road, and then buy it back for a lower price to make sure that they maximize their money and minimize yours. They could spoof trades and wash sale shares in order to close some of these positions or cover some of these positions. But BetterMarkets.org continues to say, payment for order flow has proven harmful for investors and the markets. It creates a clear conflict of interest for brokers who are obligated to seek the best execution of client trades. But if brokers are selling their orders to the highest bidder, can they really be expected to seek best execution? The interest conflict is perhaps best exemplified by a December 2020 Securities Exchange Commission enforcement action against Robinhood, because Robinhood makes statements that they gave users superior execution, even though they knew, based on their own analysis internally, that their acceptance of these payment for order flow payments led to significantly worse execution quality, meaning that the Securities Exchange Commission found that Robinhood cost their users $34 million in losses from their order execution practices compared to what they would have paid at other brokers, even accounting for the $5 per trade commission that those brokers charged. So the Securities Exchange Commission found that you lost $34 million more by having, quote, commission-free trades than if you would have just paid $5 a trade to the other brokerages instead of going with Robinhood. Do you realize how large these hidden fees are that you're paying? Instead of getting a share of stock for $100, you're getting it for $110, and you're buying multiples of them, sometimes many multiples. Instead of paying $5 a share, you're getting it for $5.50. And if you're buying 50 shares, 100 shares, you're losing a ton of money. So much so that the SEC found that Robinhood's users lost $34 million more than if they would have just paid a few pennies or a few bucks for the commission up front, because those are hidden fees. So this illustrates an important point, they continue to say, that the payment for order flow enables brokers to offer trading without commission, but so-called commission-free trading is not the same as cost-free trading. Instead, this practice transforms an upfront, a visible, a fixed cost, where you know how much you're paying, into a hidden, variable cost, from which retail brokers like Robinhood and high-frequency trading firms like Citadel are making billions of fucking dollars by robbing the hood, by stealing your money from you. But you know what? It's not technically stealing, because you're agreeing to pay them these prices. You're agreeing to letting them take as much money as they want, because you don't know how much you're paying for your trades. And of course, Better Market says that this does not benefit retail investors, as it is clear to anybody who actually understands financial markets, who has done one tiny iota of research into payment for order flow and dark pools. It contributes to market fragmentation, in particular by routing orders to high-frequency trading firms who either execute the trades against their own inventory or route them to non-public dark pools, meaning those orders never have a chance to interact with other orders on public exchanges. Do you understand, folks? It's really as simple as that. True democratization is possible, but not from the Robinhood / payment for order flow model, they said. Finance can and should be democratized, but the Robinhood PFOF model is not how. They should be making it easier for Americans to make money in the stock market. But it's highly unlikely that if they engage in the frequent trading strategy Robinhood and other platforms use, predatory DEPs encourage. Rather, for most retail individual investors, using the stock market money to make money and achieve realistic, ambitious financial goals means foregoing the often frequent attempt of making a quick buck and instead opting for a longer term buy and hold strategy that allows customers to take advantage of compound returns to increase their wealth. Put differently, it would encourage customers to think of themselves as investors, not merely traders. Main Street traders and investors should not be exploited and manipulated by predatory sales, marketing, and trading techniques that use artificially generated thoughtless activity and endorphin highs to generate financial lows. Those Main Street Americans are still waiting for and deserve a real Robin Hood. Period. That is where Lit Exchange comes in. That's the whole purpose of Lit Exchange. To avoid this,
first FTX burned down, and now your stock brokerage is on fire.
Oh, let me restart that. I got a little lag spike there. Whatever, let it go.
Change.
Doesn't matter.
Lit Exchange. No dark pools, no restrictions, no bullshit.
Bro, what happened? I was rich, but then my brokerage restricted trading and I lost it all.
It's time for change. Lit Exchange. No dark pools, no restrictions, no bullshit.
They can literally pull the plug on you if they think you're making too much money. Thanks to payment for order flow, thanks to dark pools, thanks to these brokerages being in bed with all these cats.
Burned down, and now your stock brokerage is on fire, and not in a good way.
It's time for change.
Y'all need to be on the lookout for Lit Exchange. It is an upcoming stock and crypto brokerage. And it's the first time in the history of the world where you can invest in it. We're doing a Reg CF, regulation crowdfunding campaign, via the Jobs Act of 2012, and this is the first time in the history of the world that any upcoming stock and crypto brokerage startup is allowing retail investors to invest in the company before launch and before initial public offering, before IPO. Folks, this is a once-in-a-lifetime opportunity. By doing this, you are making history as one of the very first people to ever invest in the first upcoming stock and crypto brokerage to give you the opportunity to do so via private equity. And then the company plans to IPO in the next couple of years, the next 2-3 years, at which point you would have the opportunity to sell your shares. Also, the company may do potentially buybacks of shares, at which point you may also be able to make money before the IPO even occurs. Now, of course, there is a potential for losses as anything, and I'm legally obligated to say that. But I am very confident in our abilities here. Founders Program is open now to all retail investors and ends August 9th of this year. Lit Exchange has applied for NASDAQ ticker reservation. That means we are pursuing an IPO, and this would create additional exit opportunities for investor returns. If you don't understand what that means, read it again and maybe ask AI. Investors will receive equity and benefits designed exclusively for this early round. That means the equity and the benefits that we are offering in this round will never be offered again. There's a lot of perks and equity shares and ownership that is available here to the people who are participating. And again, this is the first time this has ever happened in the history of the world. No other stock and crypto brokerage startup has ever done this. None. Ever. Why? Because they reserve those things for their hedge fund friends. So again, you can go to litexchange.com, join the wait list. Type in your email, join the wait list for litexchange.com. You can learn more about the company because Lit Exchange aims to automatically route orders directly to live markets and avoid dark pools to actively prevent manipulation of your trades and your equities. Beta testing is scheduled for the fourth quarter of 2025 this year for all founding members only. So those that take the time to invest in the company will be the ones that be able to participate in the beta, and we are scheduled for launch for 2026. We did a poll on Twitter, and over 91% of all the people that participated say yes, they would be interested in a broker dealer that does not use payment for order flow as their main source of income, because commission-based trading means transparency. If I'm making a small purchase, I wouldn't mind paying a few cents, knowing that that's exactly my fixed cost. If I'm making a big purchase, I wouldn't mind paying a few bucks, paying a couple bucks for a big purchase, knowing that I'm getting the best possible price execution, that it's getting best possible price discovery, that the money that I'm investing in this stock, in this company, in AMC, GameStop, or any company, is actually properly changing the price of the company on the stock exchange to the positive or to the negative, because that helps me in my long-term investment. I would rather know that I'm not losing $34 million more by pretending I'm paying commission free, when in reality there's a lot of commission there. It's just hidden fees. And that's on the sec.gov press releases here, CBS News. You can find all that on the website. But yeah, there's all sorts of cool shit going on here. A bleeding edge user interface, swarm intelligence capabilities with a combination of all of your best friends together in the same place, chatting it up, doing due diligence, along with the autonomous AI, which is going to be absolutely huge. Which autonomous AI, think about what that means. And of course, there is going to be artificial intelligence that you can ask questions to and interact with, but also artificial intelligence that automatically brings you information and gives you data that you didn't even know you needed because it's brand new. And of course, be on the lookout. I will be discussing with you guys regarding our most recent patent filings. A lot of this is patent pending, and I will be showing you guys some of the patent filings in the coming week or two. Cheers, folks. I wish you peace and wealth. Have a great rest of your day. Here's the fact sheet from bettermarkets.org, the website as well. I will share that with everybody after the fact in the comments for you guys to take a look from for yourselves. You guys may have heard who's in charge of this. It's Dennis Kelleher. And they are basically an organization. They're a nonprofit organization, for those of you that are unaware. So they have no interest in, lying to you one way or the other. You can see here, Better Markets is a public interest 501c3 nonprofit based in Washington, D.C. that advocates for greater transparency, accountability, and oversight in the domestic and global capital and commodities markets to protect the American dream of homes, jobs, savings, education, a secure retirement, and a rising standard of living. Better Markets fights for the economic security, opportunity, and prosperity of the American people by working to enact financial reform to prevent another financial crash and the diversion of trillions of taxpayer dollars to bailing out the financial system. We need to reach out to Dennis Kelleher. I think I'm going to do that. I'm going to reach out to Dennis Kelleher and his team, and maybe we can have him here on the channel as well, even if also briefly. We will see about that. But we've got a couple exciting things going on. I've still got an interview with the Chief Executive Officer and the Chief Financial Officer of QNTM, Quantum Biopharmaceuticals, that I will be releasing to you guys later this week. Cheers, my friends. Have a great rest of your day. I wish you peace and wealth. WGBSFR. If you know,